Alrighty, so first of all, prayers up to my people out there in Iran, right? But I'm not surprised. They've given you the blueprint. The Friday print was terrible. This whole structure is disgusting. The dark pools, the gaps below, the way these headlines have been hitting in terms of good news being sold off, the June 11th CPI, cold print being the top, the interim top for now. I'm not surprised. I am not surprised at all. And, obviously this isn't anything crazy. We're down 1.2% on US tech over the weekend. Um, but I'm just not surprised at all. They've given you the blueprint, they've given you the signs, and now, I don't mind not being positioned short over the weekend. I can't speculate this. I can't sit here and say, oh, we're going to attack Iran this weekend. I'm swinging puts to 590s. No. Um, this last week, we had Fed meeting, OPEX, short week, quarterly OPEX, expiration, all that. I can't really sit here and justifiably be confident enough in swinging short unless I have a lot of leeway, unless I have a good position. And I did originally have a position. I had an NVIDIA position from up here on Monday. I cut that on Wednesday into the Fed meeting. And obviously we get, that kind of UTAD above those highs that I wanted, where there's a lot of volume back behind them. And really a failure to establish any subsequent higher high distributed above that on Tuesday and Wednesday. And so we come into Friday, and that's where the draw is on a relatively flat open. That's exactly what I wanted. But I ended up just cutting my position when we get the closure over 145 and into the Fed meeting where I was a little bit speculative. Um, and obviously, we still have, this is not such an issue for me because we still have an opportunity to short this later on. It's one of those things. It's like, okay, now how do we go from here? Um, so right now, about a 1.3% gap down on weekend U.S. tech, which is the Nasdaq 100, and it all depends where we open up. We have data Thursday, Friday, and we have quarterly expiration next Monday, which we could potentially be pinned around that 5,900 spot. Right, that's a pretty big spot. That's a spot that the JPM collar is at. I think, is it the long call? I'm not quite sure, but a spot where there's potentially going to be um, some pinning of the indexes this week and the next, right? So still short focused, right? My thought process has never changed. The week of the 12th is kind of the initial start of our redistribution. Obviously, we have the preliminary signs down here following what was 15% off the lows. Um, and, as we push 2025, right, we see the exhaustion, we see the breakaway gap, the 3% leg in a couple sessions post expiration in May and OPEX. The continued distribution during a short week with those court ruling highs on the 28th and the 29th being sold off. The end of month flows from May. The fake breakdown candle into a cold CPI print kind of being our top for the time being, and a subsequent lower high and path of least resistance through the inlog, right? And what I mean by path of least resistance is essentially we establish a 1.3% gap up, or not, we establish a 0.95% gap up on the week. 80 million volume backing that is not really appealing to me. For a gap up to start the week, I don't only want to see 80 million volume. I mean, this candle has 92 million volume, and it's a 0.5%, obviously, a little bit of a larger spread. But still, paying attention to the lack of aggressive effort put in by these buyers and more of a passive behavior from a seller within the gap from last Friday the third, or a couple Fridays ago, the 13th. Kind of gives you that look, right? But like I said, we had FOMC, we had OPEX, we had a day off. Yeah, I could have kind of shorted this to the INWOG. We didn't really see, I mean, it was kind of just a pop and exhaustion and slow trickle down in the close, gap down, weak buyer off of the INWOG, low at 600, and then the breakdown on Tuesday's session to the fulfill. I don't know, don't really like that too much. not really like in discounted area or anything on Monday. But even when you look at this extended hours chart, right, this paints such a large picture. The Moody's downgrade, the passive selling taking out those Friday highs and the expiration, the weak buyer off 581.47, the pullback or rally higher into the court ruling highs, right? The kind of notable buyer off the 527 gap, especially those end of the month kind of fake out, and then that passive seller into those highs being taken out, giving you a decent little leg on the fifth, and then the failed breakdown where they continue to distribute this, right? It is all in good news. This was on quote unquote good news that sparks, uninformed buying. This as well. This as well on the 6th that sparked this pop. And then this was CPI 606 was our kind of interim top for the time being, in my opinion. I don't think it's going to be the top overall. Right, we obviously get the breakdown, subsequent lower high. That Thursday, June 12th print was a large anomaly in volatility as well as a notable signal in energy, printing nice prints on the 11th and 12th, like I discussed. You're seeing that Wednesday candle from a couple weeks ago be put in 1.45% print, 24 million volume, gap up, higher low, and then we get the continuation that Wednesday or that Thursday. Well, meanwhile, you're seeing QQQ close red to green 0.34%, right? Meanwhile, you see volatility up 4% that session, 15 the next. So there are a lot of red flags on that Thursday print, is kind of what I'm saying. I did get faked out. It was a difficult range for me to trade, and I think it's going to become a little bit easier now. These next 2 weeks, right? These next 2 weeks, I'm very short side focused. Obviously, we have a gap down that I'm going to have to play with. But I think we can see 579 by the 7th, and I think we can easily get 1 to 2 opportunities to short this on a good position, right? To run this a good chunk, especially, to 590 to 586, and then to 579, depending on where we open up. And there's a potential for a long within here. I will be completely honest. I might be a long-sided trade partaker this week, whether it be midweek or early week, right? Because we're going to revert to the mean. It's just kind of inevitable. It just depends on the risk to reward and the timing. It's not a long that I'm really aggressively excited about, especially post Beta Charm flows that expired on the 20th. It's just something that I could potentially see an intraday opportunity opening up off of some pivotal points within a couple charts. But nonetheless, right? It's yeah, I didn't swing any puts. Yeah, I don't really care too much. It wasn't like a plus setup over the weekend. It wasn't anything insane. It wasn't like this kind of May 12th week. But the timing was there. The footprints were there. They gave you the whole fucking blueprint. I've been talking about this for a while. You can kind of see why the war news was setting up. It's not difficult to spot, right? We're now probably going to open up if we, fade down another 1.3%. If we bid 586, I mean, that's 3% move from the highs on CPI being our interim top. So it's not a surprise. It's not anything that I'm extensively surprised about. It's not anything that I'm super, happy about, or not super upset about not being positioned. Yeah, the signs were there, but I mishandled this range, and it is what it is. So going forward, right, my short focus is still SPY and NVIDIA. 586 is huge, right? That's the May 27th open. That's where we bid it on the 28th and the 30th, or 29th and the 30th, and then the 2nd. And we started this rally that was completely distributed. If this buyer is completely wiped, right? We've had this bid show his hand 3 times, and the progression that he's gotten is relatively weak. If this buyer is wiped, right? If we tap 586, if we open up around 586, I'm probably going to lay off the gas and wait for a lower high. And the thing that gets me is potentially the pending in a quarterly expiration. I'm not going to take so much of that into account. I'm not going to sit here and only play short under 590 post quarterly OPEX. Not something I'm going to do. Not something I'm going to try to speculate on. Something I'm going to take into consideration, especially on the 30th. I might be long focused on the 30th for a potential end of day squeeze, but for right now, I'm still focused short side, and it just really depends on where we open up. But I'm simply looking for something like this, right? I'll pull back to 586, a lower high. Honestly, would not mind the gap fill. I know that's a little speculative, anticipating this whole INWOG to get completely filled. I would not mind it. It depends 100% on where it happens. If it happens in the next week, that'd be even better. And then 579, right? The confluence beyond 579 is huge. The dark pool, the gap, um, it's very relevant, right? 590 is very relevant as well. If we bid 590 midweek, pull up to where a lower high could be established, potentially around 593, which is a pretty big spot, and 592.60, which is the expiration for May's high, right? If we bid 590, if we pull up, fail 593, I'm going to focus 586. Then, like I said, if that buyer is relatively weak, similar to this day on the 22nd and the 23rd, I'm going to hold a little bit. We take some ads at a lower high off 590 and push this to 579. So we could see 579 this week. I mean, the weekly prints basically gave you the blueprint. If you look at where the volume comes in at, if you look at how, 0.5% down, 409 million volume compared to the 5.3% candle on 360.5 million volume. You look at the highs being taken out from the week of the 3rd or the 2nd. You look at the kind of green to red weekly closures across the board on a lot of relatively important benchmarks for the broader equity market as a whole. This is not a good looking sequence overall. It's not anything that I'm going to say is topped out quite yet. But I think that, this is no surprise to me that we're seeing this. And it's no surprise that it's happening after June expiration, right? You see what happened after the May OPEX. Major call anomaly. 70% calls expiring, especially after the move we had. Once those flows are off the table, the market's free to move as it pleases, right? The painting and the movement under the hood is no longer there. I've talked about this. I've talked about even the Summer of George scenario that happened this summer and last summer, right? Where the flows outweigh the liquidity. The vol compression outweighs the liquidity during these months, and especially after the sequence that we had in Q1 and early Q2 of this year. I'm not surprised that we see that float up and that vol compression, right? It's not anything that's super surprising to me. It's not anything that takes me off guard. And this isn't anything that takes me off guard either, right? Now, after 579, right, obviously depending on what fashion we hit it, then I'll kind of begin to see if I think we see a subsequent U-tag within this range, right? A third higher high would make the maturity of this campaign much more appealing. Taking out these 613 highs, I would not be upset with that. Right now, though, if we just take it from the 19th high, 1.63% in 23 days. I don't know. This is a gross range, and I feel like you have to understand that. Even if you're not shorting the equity market, which, is oftentimes a difficult thing to do, right? A lot of the times, the best play, um, I'm not surprised that this happens. I'm not surprised that it's happening in this range. I'm not surprised that this happens post June expiration. I'm not surprised that it happens in such a fashion, and I do want a little bit lower, right? That's something I'll be completely honest about. I want a little bit lower. It's going to depend how it happens. It's going to depend how we open up this week. Um, Personally, It's going to depend how we open up this week, um, and how we act in the GDP and PCE Thursday, Friday, right? Like I said, NVIDIA is a big focus of mine, and this is something that I'm kind of looking for on the NVIDIA chart. We obviously have that kind of UT established on Monday, the 16th, right? There's a huge amount of volume coming in. There's a large aggressive seller at the tape on 145. Starting from the 9th, I've literally been watching him layer the fuck out of this ask. And then we see the subsequent kind of taking out of those highs, the hands changing, the decent kind of leg. I did bid some puts that were green 30% here, but I ended up cutting that position in the Fed meeting, and we obviously get those highs taken out. Like I said before, very liquid, very high volume backing these highs. This is a large amount of volume, the highest kind of since the report almost. And when we see, that report kind of catalyzed the 7% leg off of 142, the low volume rally redistributing within that range where all these late sellers are being trapped, all these hands are being changed, and a ceiling being established, and then taking out with an immediate reaction from a larger seller, seeing a nice leg backed by a good amount of volume. Obviously, it's OPEX, but there's still a good amount of volume and an effort behind this candle and a very strong result. Yeah, it's a pretty shitty looking chart. When we develop a subsequent lower high, this is a main focus of mine. This and SPY are my pure short focuses. The timing aspect very, very well depends on where we open up at and how we look at the data. But we have the INWOG to fill at 142. We have the 141.72 gap from the 6th that is yet to be filled. And we have that being bid not once on the 9th or the 10th, but twice on the 13th and the 10th. And really getting you almost nowhere, right? And we filled this gap from the 13th as well. But that Wednesday print this week kind of shook me out. I can't really be too upset about that. The Thursday print on the 12th was a little bit more of an easy short-sided trade, but with the day off, with the Fed meeting, with OPEX, I was just kind of taking that position off, which was in hindsight a bad idea. Right, Vixpiration was Wednesday as well. But I did think that the potential for a squeeze on OPEX up to 600 was there. And that obviously didn't end up happening, right? Which I can't really, I knew the risk I was putting on the table. I knew the reward that was at play and that was at stake here. And, I it was a calculated risk. It was a calculated risk, right? And it obviously didn't happen. I think that does kind of potentially set up a squeeze on the 30th. But, it is what it is, right? We're going to see how we open up this week. I'm still looking short. Obviously, this would be a really appealing lower high to me from 141 up to 143. That would be something I focus 140 on. If that doesn't happen, I focus 140 to 143, right? That's a lower high. I'd focus 137 on. It's pretty simple. I'm just targeting the gaps below. I'm targeting them off of lower highs that are established, depending on when and where they're established at, right? But like I said, it's here kind of this to here, and then to there. Or, if we fill this gap, if we do get like a 3% gap down, I'll look for that. But another gross chart, the weekly perspective has been painting the larger picture at hand here for a little bit now, ever since the report, and just a really broader, broader picture of things being given to you by the NVIDIA chart. The Apple chart, this is a relatively deceiving candle potentially, but I do want the Apple chart at 224. I think there's a lot of consolidation within this range, and you still have a higher time frame distribution that is not going to be outweighed by this cause built in the week of the 7th. Obviously, there's a lot of volume backing this, filling a May 2024 peg, but I don't think that it's going to be relatively, like you're not seeing the result that you'd want off of such a candle. And such a gap fill, right? You're seeing a lot of consolidation, but you're not really seeing like a reaccumulative sequence. You're not seeing a lot of lows taken out. You're seeing a rally, a gap up on the 14th. You have a 10% gap that we established on the 3rd. Breakdown, higher low attempt, another stall into the report in May. Filled some of those gaps. Another failure within the peg, and then we kind of established this floor here. Stall within this range and pull back and bid the gap. I wouldn't mind 190 being taken out. You still have these two lows at 193 from the 23rd, from the 7th, right? Two weekly lows within that range that have not been taken out. And like I said, a lot of consolidation, which also, right, when you think about that, when you think about, the liquidity built up at these highs, one, and just the consolidation and the lack of volatility, there's going to be a lot of orders that are built up at 213. There's going to be a lot of hands that could potentially change fading those highs. And there's going to be a potential draw to 224, especially if this is kind of wiped initially. And this could really spark an aggressive leg down to 164, right? This could be your kind of secondary LPSY at the golden pocket range, where we've already seen a seller get a little bit of a leg, but not anything too appealing, and the gap above being the draw, in my opinion. But, a couple of weeks under here, right? If we get those July flows, not a bad long to 224, not a good long, but not a bad long. And then if it sets up like a weekly sweep here, right? Like a red to green week where we see this is a 5% move. If we see that all given up in 1 week, taking out those highs, sweeping these highs on a weekly perspective, a ton of hands changed. An aggressive seller showing his hand at that gap would be phenomenal, right? Tesla, in all honesty, is a long side focus for me. If we see a gap down and we see some signs of a buyer at some pretty important spots within this chart, I'm probably going to go ahead and take the stab on an intraday move. This is a good amount of consolidation. Not seeing a too aggressive bid, but as we pulled into that lower high territory from the May highs, we're also not seeing a larger seller, right? We're not necessarily sitting here seeing a redistribution occur, seeing some exhaustion, but we have a big 19% move to digest. From the 5th or from the 9th, I guess you could say, where we initially bid that gap from the 6th and the election gap low that we reclaimed. And I think this chart has a little bit of room left in it, right? Inside week, I'm not really going to build out like a massive swing here. I think shares are phenomenal on this name. I think that the OPEX print can be a little bit deceiving potentially. But we pull back to 308, I might take a stab long, right? We pull back to 298 to 300, I might take a stab long as well. It's kind of all about seeing where we open, seeing how the tape looks, right? Like if we open up around 590, maybe sweet 586 into data, and it's like a long, I may long Tesla. If we open up, redistribute into the bear in long, I might long Tesla and then short SPY or Nvidia to 140s. So it kind of all depends on where we open up, what we look like, right? We're gonna gap down. Let's see the tape and how the tape feels on Monday. My focus would personally be like a midweek reversal one way or the other. If we accumulate this to like 586, see a spark to 593, and then I can short that post quarterly expiration to 579. Or if we break down, redistribute, and we can get a lot of volatility to the downside this week on a campaign that's relatively mature. But, I'm not surprised. I'm not surprised at all. Bitcoin was a great buy in February to April, and now we're seeing those highs taken out. And it's a very similar sequence to 2021 to 2, where we see kind of the rally off the lows. We see the stall, pull back, reaccumulate, rally again, and we fade those highs, right? The progression's relatively weak. We look at the high to high here. It's about a 6% move for a new high to 210 days. That takes 210 days. That's not a good progression from buyers. Yeah, there's a long opportunity internally here. Absolutely. But that's not like a great amount of progress. And when we see a larger seller at the highs and you understand the overall just human, the way that humans think and the way that these retail traders think, being late, right, or getting trapped, selling it, and then they're selling it again, and then they're getting, trapped again on the opposite way. This is a kind of similar sequence potentially, obviously a little bit different, but 2.4% in 120 days, if this is our top, might not be the best look for Bitcoin, especially when this weekly candle closures in 5 hours. It's not really the best look for the Bitcoin, if I'm being honest. If I'm being honest, right? So I've said this for a while. Risk on equity is looking hideous. Um, I'm not a big fan of stocks right now. We're getting a gap down. I'm not surprised. Interim top off CPI. And I'm going to come into this week with a midweek reversal in mind in the data, whether it be long or short. I'll probably know by Wednesday what my read is. If I'm longing anything, it's Tesla, right? Most likely. If I'm longing anything, it's Tesla. If I'm shorting anything, it's Nvidia or SPY. It just all depends where we open up at and kind of, um, where we open up at and kind of how the tape feels into some catalyzing data sets at the end of the week, right? And I have my focuses, and I'm shorting the pops though until June 7th or July 7th, right? If we break down 590, we pop up. I mean, that wouldn't. If we gap down to 586, 586 is huge. 586 is a pivotal spot, and if we can establish a path of least resistance through there, if they bid this, pull up, we redistribute, whether it's this week, whether it's next, right? That would be a little bit of a high volatile week, maybe, if we see a gap down, fill that gap, and a pullback to 170. So maybe if they kind of accumulate this in the data, mark it up, and then sell it off within the gap, we can push this to 579 the week of the 30th. Same thing with Nvidia, like I said, potential for this to run, right? It just depends on where we open up at. But the signs were there. The equity market is not appealing anymore, right? Obviously, hindsight's 2020, but you had an insane opportunity in April. You had an insane opportunity to build up positions. The 4th and the 7th and the 8th, right? Cover a good chunk on the 9th, and then re-roll those positions. The 10th, the 21st, the 22nd, up into this exponentially aggressive rally off of the timing aspect being very pivotal into the summer of low volatility. The cyclical aspect of financial markets are always around, right? The quarter 4 and early quarter 1 rallies due to those expirations, right? December being a large index expiration, January being a large single stock expiration. Those flows coming off the table, giving us some downside, and then the summer giving us that low volatile flow into a potential quarter 3 breakdown, which is almost exactly what happened here, just a little bit earlier. But the same kind of aspect is what I'm going to look for into quarter 3 of this year. And I do think we see new lows soon, right? I said this in the scan that I recorded yesterday. Some things shifted up. Had to discuss what my outlook is with this bear in Wonk, right? Why I could potentially look a little long, and if I do, where I'm looking at. Why I'm probably not looking long in any swings, though. I'd probably look long like an intraday move on Tesla, and why this has the potential to continue a little bit lower into July lows, right? And then also why like this is a great opportunity to build out shorts, right? The preliminary signs were here in this range the week of the 5th, but this was those Vanna Charm flows, and we never really got. I mean, I'm not longing this April 30th pullback on GDP off of 545 and 566 or 466, right? I'm just not. But I kind of actually want to check these puts. I'm just not, right? I'm just not doing it, right? I wanted that pullback into May flows, never got it. Continued distribution happening, and I do think that this can pull you back 509, new high, and then that can spark a leg into August. So, yeah, I said it before, building up puts up here on further dated expiration, um, targeting these gaps, right? Your first kind of target being 564 to 554 to 545, and then potentially into these gaps before, covering, waiting for a macro lower high that could potentially happen in quarter four. You have to understand the timing aspect as well. This could pull us back, um, you know, 10, 11, 12% from the highs in quarter three, right? If we do get this, and then develop a subsequent lower high that could actually push us to new year-to-date lows or new lows next year. Year-to-date's a little speculative, giving up a 25% move, um, especially with how quarter four could act. So something I'm paying attention to, but yeah, there's things under the hood that have moved this market that are now coming off of the table on a quarterly expiration like this, and things are going to get ugly, in my opinion. So that's just a quick little update. My outlook for the week. I'll probably do a midweek update, anyways. Um, it's been a difficult range for me to trade. I can be completely honest and say that I've been losing a lot of money ever since this short I had. Um, but I think the opportunities open up this week and next for another reshort to 579. So, yeah, pretty much it.